Is the real estate crash over, and why am I holding a box or pop container of raisins? Well, if you understand the concepts of not just what's inside this box, but the ideas that revolve around it, you'll succeed at real estate investing. Otherwise, you're destined for failure. So let's get into the content. The content, which I did try to live stream earlier, and unfortunately YouTube pulled a YouTube on us. So now you're getting a recorded video. And the concepts that I was talking about earlier were to address the question of, wait a minute, Kevin, this summer you said the market was crashing. Then you said the market has stopped crashing. Then you said, well, wait a minute, there's still a possibility of a crash. And now you're saying the crash is over. Kevin, you're sending me all of these mixed signals. Yet, if all you did was read the headlines, then yes, you are right to be confused. But if you have been following my content, you know that this is a complete misrepresentation of the content that I strive to give you. What I strive to give you is exactly what's happening in the market at the time, and not every little fart that happens in the market, every little up and down, but rather the overall theme of what's going on and how you should prepare yourself based on probabilities, statistics, math, odds, and economics that say, well, maybe this is the trajectory. Because if you understand the trajectory and you understand that you can increase your odds of success by understanding those, and of course, smashing that subscribe button, then you will probably succeed at real estate investing or any kind of investing. Now, let's get into the concepts. First, what's happening right now? Right now, we have a lot of drama in the news media. Check out some of the articles we've got. I'm just going to read you some of the titles. More U.S. metros are seeing slower home price growth as housing market cools. In LA's luxury market, supply is outstripping demand. Oh, and I threw these papers up in the air during the live stream and then rolled over them with my chair. That's why they're crumbling. Home buyers navigate sluggish housing market. Aspen's luxury real estate market, cold going into the winter. That sounds pretty nasty, especially since I'm in Southern California and I don't have to worry about that kind of cold. The Chicago real estate market is, in one word, meh. All right, so we have a lot of negativity going on, but what does this negativity represent, and how should you understand exactly what this negativity means? Well, let's hop into it, because guess what? This is a one take, because the reason I wanted to do a live is so I didn't have to do any editing. But thanks YouTube for punching me in the face. See, I'm trying to bring you all daily content here. It ain't that easy, as well as putting out 5 and trying to get to 10 lectures a week in the real estate investing course. Link below. Okay, here we go. So, why am I like a madman who, if you just read the titles, seems bipolar or tripolar? Well, you'd be wrong by just reading the titles, as I mentioned. What is going on is this. Here, you have a graph. It's empty. Oh, and the Canadians want me to give you a few reminders. Jeff Weibo and Matt McKeever are having an event in Vegas. Check out the link in the description. I'll be there with Graham Stephan. And Graham Stephan, who's half Canadian. See, I could group him in here. It's almost redundant. He is having an event this Saturday with me in Los Angeles. If you'd like to be there, you should. Link also below. I lied. I put in a cut. This summer was preceded by a surprisingly strong Q1 and Q2. In fact, Q1 and the beginning of Q2 were so strong that we were worried like, oh my gosh, inventory is super low, prices are like skyrocketing, this is nuts for the beginning of the year, this is crazy. And comps were way lower in August of 2017, and now they're way high in Jan, Feb, March of 2018. Well, guess what started happening at the end of Q2, which was June? And mind you, I started bringing you this data as soon as early July. The market started souring, but not just a little bit, a lot. The market was going up, and then we saw about an 8% correction downwards. I had talked dramatically and at length about the market inflection point taking off. In addition to that, I told you as soon as, you can look it up, about 4 weeks ago when I was at the Driven event, met Grant Cardone and Patrick Bet-David, Bradley, so on and so forth. I told you, you know what? Right now, the September data, which mind you is Q3, the end of Q3, the very last part of Q3, because remember, October, November, December are Q4, so the end of September is representative of only the transition, the new inflection point. Most of Q3 was bad. I will say, most of Q3 was this negative bad. But guess what happened right after that? We started seeing positive again. And that inflection point is what I referred to you all about a month ago, right when it was happening. Not like the news articles that are reporting data to you about Q3. The news articles are telling you, oh my gosh, July, August, and September were horrible as a whole. I don't know why they're so slow. The data is available. I look at Ventura County, San Diego County, Santa Barbara MLS, the Los Angeles County data regularly, just to track what's happening every single 2 weeks. That's how I see these inflection points, and that's why you should subscribe, hit that notification bell so you can continue to see these inflection points as I see them, and adapt your sort of investing career and culture to what's actually happening, not old news. And then we're going to talk about this box of raisins. Now, right here, end of September, we started seeing prices go up again. Nobody likes to refer to that because it's buried in the end of Q3 data, which means you're not going to see this upswing come out or be reported in news data until Q4, except here I am, much like this summer when I told you the market was going down, telling you the market is going up. So all of these articles are wrong. Here's an article that actually inspired me to make this particular video. This was a Market Watch article that was published this morning, and it mentioned that U.S. pending home sales edged up 0.5% in September from August. So here's somebody who's actually reading the end of Q3 data. Very, very interesting. So by analyzing this, you could see trends, and then you can see, well, wait a minute. The crash we had this summer is over. What is going to happen is unknown. I gave obviously probabilities that we could see a flattening, we could see a decline, and I thought that this little inflection point here would be spring 2019, obviously. The Fed seems to see sort of this decline happening closer to 2020, and there are plenty of crashers that are saying, we're just going straight to heck, and you know what, the world's gonna collapse. Well, I'm not one of those people. I'm much more of a long-run Benjamin Graham, Warren Buffett, value investor, if I can be so bold to say that I am. And instead, here's what I like to do, and what I like to teach you exactly how to do in my real estate investing course. Keep in mind, I 100% guarantee that. You can Google my reputation and see I'm not out to steal $200 from you. My goal is actually to teach you. My long-run Grahamian, Benjamin Grahamian, and Warren Buffettian view is that over the long run, the market goes up. Now, you're going to see cycles go up and down and up and down, and then when you zoom into this, you're going to see all the daily madness of the stock market and what happens in the real estate market non-stop. This is unstoppable. However, while you have no control over what actually happens in the market, you do have control over how you buy. And my recommendation is that you always try to buy 20 to 30% below market by buying wedge deals. And by buying wedge deals, which I've shown you how to buy them, I'm going to continue making videos on this channel about how to buy them, and we're going to go into crazy detail in the real estate course talking about this. And I know some of you are like, Kevin, well, why are you making a course? Why don't you just put it all out for free on YouTube? Well, here's an example. Look at yesterday's video, the video on how to screen anybody's credit. Worst viewed video. So bad that YouTube analytics told me, what are you doing? Your last video was the worst video you posted in a while. Don't do that again. Okay, I guess it's going into the course then because, well, people don't seem to like that stuff. I'm sorry, the high detail stuff is what it is. That's the nature of YouTube. Maybe it just doesn't get pushed because people were very receptive to the content. It was great content. Anyway, the point is, if you could continue to hedge by wedging, hedge with the wedge, there you go, hedge with the wedge, and buy under the market it doesn't really matter to you if the market does this because you insulate yourself from rent depreciation and price depreciation. Now, there are plenty of people that say, well, wait a minute, Kevin, why do you draw the slope like this? Look, to me, I don't care what the slope is. I don't care if the slope is flat. Tenants are still paying off properties for me, and even if the slope is flat, I'm still making money. I am not a contrarian negativist that says over the long run, markets will just plummet and decay because you know what? Then let's just get abducted by aliens at the end because it's a very fallacious, slippery slope argument that is not founded in any kind of real historical belief. Markets tend to go up in the long run. And that's why I always take the long run on investing. And ultimately, you should too. Now, let's see here. We had Jim Cramer this morning came out and said something very interesting. He said that what we're seeing people do is they're playing a game of chicken. People are sitting on the sidelines wondering, what should I do? Should I buy? Should I sell? I don't know what to do. He didn't really go into detail as far as what he suggested, but he did allude to the idea that if there is a discounted property, if there is a discounted stock, see, I'm always thinking about real estate here. If there is a discounted stock, buy it. As long as their earnings are positive and things are looking good, buy it. And that's exactly what I say here. That's the conclusion I always come to, is if there's a good deal in a good area that will probably have a long-run positive future, you should consider investing in it. Now the raisin box. The reason maybe you stuck around to see this video. Inside this box of raisins are, well, obviously a lot of raisins, but instead of considering them raisins, consider every one of these somebody's opinion about what's going to happen in the market. Here we got Joe Blow, and we got Joe Blow B, then we got his brother over here, then we got his mommy over here, and then we got YouTuber over here. I think you get the idea. We have a lot of different perspectives and opinions inside this. And much like the lottery, one of them will be right, but not all of them will be right. And my phone keeps ringing, and because this is a one take, I'm going to switch it to Do Not Disturb while I'm on camera, because it's really bothering me. Now, what's inside here? These little lottery tickets where only one person's going to be right, doesn't matter. Instead, what matters is this. When we have this long-run understanding of what the market's going to do, here's exactly... There we go. That looks a little better. What the raisin box will do. It'll go up, it'll go down, a lot of people will react, a lot of people will be right, a lot of people will be wrong, a lot of people will be right again, a lot of people will be wrong again, and we'll just kind of keep going up and down on the roller coaster of investing. But the big takeaway you need to know is forget about all this. Forget about all these stupid articles that are suggesting using old data, albeit very old data now, that the market is crashing, things are going to get worse. How about you use new data and then report news? That would be a wise start. But either way, who cares? Because the trajectory should be the long-run vision, should be to buy in the wedge. So at the moment, is the crash over? At the moment, yes, the market is not crashing. The market suffered a dramatic decline this summer of, in some areas, 7 to 10%. Other areas stayed relatively flat because, well, the economy was maybe a little bit stronger in those areas. But we're continuing to see the side effects of that today, and that's very normal. Real estate is somewhat slow. It takes a while for sellers to react, people to reduce their prices, and then properties to go into escrow. That's very, very normal. But to say that guaranteed the real estate market is crashing right now does not line up with the data. Now note, I'm not suggesting that there won't be another crash. In fact, very much not. In the last videos I made, I think I very clearly reiterated I've been very unwavering on this platform and telling you exactly what I believe. In the videos, I have said that I believe in 2019 in the spring, the market will face an inflection point and will either flatten out, decline, add another crash, or go north. So right now, the question of should you buy or should you sell? Well, I don't necessarily think you should sell, because think about this. Right out of the gate of selling, you're signing yourself up for a 7% decline in value. Why? Because you have commissions, escrow, title, repairs, termite, sewer inspections, you name it. So right away, you can lock in a secure 7% buffer if you just choose not to sell. If you want to buy, then make sure you wedge, and you'll be able to hedge against any of this market madness. Thanks for watching.